We are right on the cusp of that, and the government needs to get out of the way, reopen, and create the conditions for this boom.
And what do you see then for your economic forecasts? I mean, Atlanta Fed is predicting some pretty nice growth ahead. Do you feel like we are on an upswing?
I think we're definitely on an upswing because the one big beautiful bill was passed on July 4th. And could I just say to this group, could you imagine if we were still negotiating a budget deal in the midst of this chaos the Democrats have created? The other thing that has gone unnoticed with all the headlines is we actually had a smaller budget deficit last year. Not by much, but it went down. And the way the math works, the deficit to GDP, which is the important number, now has a 5 in front of it. So,
you want to see a 3, though?
Yes.
Still possible?
Still possible.
How do you get there? I mean, tariffs are helping, but not that much.
Crawl, walk, run. And it's like Warren Buffett says, how do you lose weight? Exercise more, eat less. So we're going to grow more, spend less, or constrain spending, and the deficit to GDP takes care of itself.
So that's going to come down.
Yes.
What about the inflation outlook right now while we're talking about the economy? Because I know you have said tariffs are not inflationary, but we are seeing inflation firm up here, and at least the progress on disinflation has stopped.
But Sarah, if you look, the inflationary component it's very disjointed because if you go through the numbers, a lot of the inflation is in services, which has nothing to do with tariffs. And if you get a one-time price adjustment, that's not inflationary, and that comes out of spending somewhere else. I'm not concerned that there is a generalized inflation increase, and we're seeing that inflation expectations are well anchored. We are seeing whether it's a combination of exporters lowering prices, corporate America, because they have a lot of room elsewhere. Because one of the underappreciated things that's happening with the trade negotiations, all we hear here is tariffs on the U.S., and we've kind of established a minimum 15% baseline tariff. Some countries are higher. But the underappreciated thing, I know you had Jameson Greer, USTR, who is the busiest person in D.C.
Besides you.
Whenever I feel sorry for myself, I look at Jameson and his team because they do all, not only do they do big picture, they do all the details, they dot the I's, cross the T's, but he has done a fantastic job of negotiating for U.S. companies selling abroad. So we put on a tariff, but we also we push down to zero or substantially down the tariffs that other countries have on us, the non-tariff trade barriers. Indonesia made a very good deal, but I'm going to cut the number, but I think they may have taken down the 9,000 tariff lines and non-tariff trade barriers, domestic content rules. So
we sell more.
We sell more, and companies make more when they sell it.
Right. Which trade negotiations beyond China, which I know is occupying a lot of your attention lately, are you most focused on?
I think we are about to finish up with Korea.
Oh, is that going well? There was some question about the investment there.
Yeah, it's as I said, the devil's in the details, but we are ironing out the details. I think there'll be, again, good thing about IMF and World Bank Week brings a lot of people here, so we'll be talking about that. President had a very good meeting with Prime Minister Carney recently, so I think U.S.-Canada is back on track. I know that the Mexican team has been engaged, and India.
India is happening soon. Are we going to see more announcements on the trip to Asia later this month?
Yes. So very good chance that I will go out early, meet with my Chinese counterpart, the Vice Premier, Hu Feng, who I have great respect for. I will meet him before. So there are two conferences, ASEAN in Malaysia. We're going to do a visit. The president's going to do a visit to Japan, and then move to Korea for the APEC conference, where the leaders, as of right now, will meet.
The other big change in industrial policy from the administration has been around taking stakes in companies, private companies that you guys deem strategic and important for the U.S. I think there have been 5 now. Are there going to be more of those?
I wouldn't be surprised because, again, many of these, when we get an announcement like this week with China on the rare earths, you realize we have to be self-sufficient, or we have to be sufficient with our allies. So when you are facing a non-market economy like China, then you have to exercise industrial policy. So on rare earths, for 20 years, anytime, rare earths are not rare. What is rare is the processing and refining.
Which China dominates.
Which China dominates. I think they have 70% of the mining, but 95% of the processing and refining. And for 20 years, anytime anyone in a market-based economy stood up a processor or refiner, China came in, cut price, and put them out of business. So we're going to set price floors and the forward buying to make sure that this doesn't happen again, and we're going to do it across a range of industries.
I was going to say, though, where do you stop? I mean, pharmaceuticals are really important for national security. Defense companies, we have the Pfizer CEO, we have the Northrop Grumman CEO. Are you going to be taking stakes in all of them?
I don't think we have to do that. I do think our defense companies are woefully behind in terms of deliveries. So we may have to, as their biggest customer, may have to prod them to do a little more research, do a little few stock buybacks, which is really what got Boeing into trouble.
Because you're such a big customer.
Sometimes we're
the only customer.
The only customer.
Right. But what's the exit strategy for the government taking an equity stake?
Well, the equity stake, when you think about Intel was just a conversion of a grant. So, I was with President Trump's Secretary Lutnick in the Oval when the Intel CEO was there, and it was, well, why don't we have a stake? Why don't we have the upside? We don't have any governance there. And then with these other deals, Mountain Pass would be one of the companies where it's a rare earth miner processor. But then you see private capital come in. You see Jamie Dimon said that JP Morgan is going to get into the business. They're going to be lending. They're probably set up some kind of an exchange. They're anxious to work with us on a strategic, we have a strategic petroleum reserve. Right. We're going to need strategic mineral reserve. And the private sector is coming in, and that's part of the CapEx boom too.
But what do you say to people who say that sounds socialist? I mean, for government taking stakes in private companies, picking winners and losers, that's not how we do it in America.
Well, that's the reason we've got this rare earth problem. That it is, again, that we're not going to come in and take stakes in non-strategic industries, but we've identified 7 industries. If anyone wants to read it, I wrote a paper on this about 15 months ago for a speech I delivered to the Manhattan Institute. And I do believe, and you're pushing on this in a good way, that we do have to be very careful not to overreach. And we need to go back and examine, okay, have we accomplished our goal? And then you can move on, but we have to be vigilant. We have to be vigilant because for 25 years, we haven't been vigilant. The leading Chinese rare earths company used to be owned by General Motors. Chinese bought it in 1995. CFIUS, which I chair, the Committee for Foreign Investment in the U.S., mandated that it stayed in the U.S. for 5 years. Guess what happened 5 years and 1 day? Went back to China. Went back to China. Yeah. Nobody was watching. Everyone was asleep at the switch. So we're just not going to be asleep at the switch.
The other thing that is keeping you very busy, as if this weren't all enough, is the interview process for the next Fed chair,
Yes.
which we're very eager to hear an update about. So have you narrowed it down to 5 or 3 or 1?
Well, I can tell you there are 330 million Americans. You're talking to the one who's not going to be the Fed chair.
Okay, thanks for clearing that up.
But it's been a great process. The 11 candidates we started out with were all strong candidates. As someone, again, who was a professor of economic history, I've learned so much from the candidates. And we've narrowed it down to 5.
Okay.
That we will have to push out the next round to after the Asia trip. So I suspect that will go on in November, and then likely sometime after Thanksgiving in December, we'll present the president with 3 or 4 candidates for him to interview. It's at the end of the day, he'll take input like he always does from dozens, hundreds of people, and then make a decision.
Is one of the criteria to be the next Fed chair to want lower rates?
One of the criteria is to have an open mind. Because if we go back and look, I just reread Bob Woodward's book on Alan Greenspan called Maestro. So why was Alan Greenspan the maestro? Because he had an open mind. Because the 90s, I just mentioned, I think when I look at economic cycles, I think that the most analogous period to what we're seeing now is the 90s. And it would have been very easy for Alan Greenspan to kill the internet boom, not be open to the idea that there was a productivity boom, and slam on the brakes. Instead, he had a different view and let the economy believe that there could be substantial non-inflationary growth. So two of the criteria for me: one, do you have an open mind? What's your theory of the case? Where are we here? And then the other thing too is this Federal Reserve job. We asked someone to be this monetary policy icon, but this is also a gigantic, sprawling organization that does payments, regulation. So there also needs to be a management level here.
Right. So that's part of the interview process.
Part of the interview process.
Okay. What is gold telling you? At record highs, up more than 50% this year.
That there are more buyers than sellers.
Does it say something about
that for many years, gold mining, the amount of actual gold mining went down, and I don't think it's necessarily.
You don't think it's like some sign of anxiety or questions about reliability of the U.S. dollar and U.S. assets?
I don't know why everyone comes back to the dollar. We are the only G7 country. Our 10-year rates are down 50 basis points. Everyone else's are up. And if you look at the the Japanese rates, the percentage move is gigantic. And
but the dollar's down 10% this year.
It is down 6.7.
Oh, well, it was down 10 a few weeks ago.
But again, good thing about being a historian, not an economist, that I rely on facts, not theory. So if I go back,
are you looking at trade-weighted dollar? Is that?
I am looking at trade-weighted dollar. Fine. Well, because it's just a euro move.
Yes.
And any currency theory would tell you, when you get a bigger fiscal spend, currency is strong, so the euro should be strong. But what we're seeing in President Trump's first term, the dollar bottomed almost to the day that the tax bill was passed in December 2017. Go back and look at a chart. Guess when the dollar bottomed? Right around July 4th, when the One Big Beautiful Bill was passed.
Why? Because the outlook for the economy changes?
Yeah, the certainty, what we're seeing flow in. The other thing that happened was to get ahead of the tariffs, there was a massive amount of the U.S. current account deficit ballooned, so more dollars ended up overseas. Now that we have a more formalized tariff regime, there's not this big rush. We're seeing the U.S. current account start to deficit and the trade deficit start to contract. So that should be very supportive for the dollar.
So we've talked about a lot of different policies and a lot of what you've been doing. Clearly, you're optimistic. What is the single factor that's making you most bullish right now on our chances?
I've got to say, it's exactly the topic of this conference is that the private sector in the U.S. has been unleashed, and the best thing the government can do is put in the guardrails but stay out of the way. And the substantial deregulation and the focus on business, and I think that this is exactly what President Trump wanted. It's what I call parallel prosperity. Main Street does well, Wall Street does well, because for a long time you can have these jobless stock market booms, and the president is laser focused. That we are laser focused on small banks, because small and community banks drive Main Street. They do the small business lending, they do the ag lending, they do the commercial real estate lending. So I'm just very optimistic that after kind of being in hibernation, or maybe even the fetal position for 4 years under the previous administration, that these industries, and again, whether it's Main Street or our great tech companies, are all coming alive. The energy industry is back on its front foot. We're going to complete pipelines, and we're going to drill again. So, I think that it is that, and I think we can be in a period like the late 1800s when the railroads came in, like the 1990s when we got the internet and office tech boom. I think there's a very good chance here that the U.S., we're drawing in all this capital, and when I go around the world, I look and I just, there's nothing like this in terms of, we have energy, we have great reg, we have great tax policy, we have great certainty in our tax policy. Because I would go back to this now, that imagine if we didn't have the certainty in our tax policy, and we had not, thanks to President Trump's leadership, Speaker Johnson, Leader Thune, if we had not gotten the one big beautiful bill done on July 4th, it'd be a mess now. So, the government shut down, but we can fall back on the tax policy, the 100% expensing. But then on the other side, there are President Trump's campaign promises of no tax on tips, no tax on overtime, the small tax, if any, or no tax on Social Security, buy an American car and you can deduct the interest, and those are for working people. So it's the big companies and working people.
Well, it's a perfect way to end it, and a perfect tie-in to the conference and to our next panel of corporate executives. Secretary BESSENT, thank you very much for the time today.
Good. Thank you.
What's up, everyone? It's Carter with MoneyVest. Just let me know if the audio is good. I just want to make sure there are no audio problems. And yeah, that was Scott Bessent giving us a little bit of insight into the next Federal Reserve chairman. Interviews are underway, and they're going to shortlist it down to 3 to 5 candidates after the trip from Asia to present to President Donald Trump. One of the criteria, as jokingly as it is, that who is going to lower interest rates, of course. But yeah, among other many things, they want to take control over the rare earth supply. That's one of the priorities, and of course, really unleashing the private markets as well as the Main Street to really unlock US's potential. Gold, of course, thriving. The US dollar is down on a trade-weighted basis, but all in all, getting a little bit of insight into what the US fiscal, monetary, and again, strategy is going to look like over the next several quarters and years under the current administration. So pre-market, we're seeing NASDAQ 100 bounce right back higher, so 1% higher here pre-market. We got the SPY up over 72 basis points as well. We got SoFi pushing up over 2.6%. NVIDIA is also rallying back up to $185. If you come take a look at some of the hot stocks, they are once again flying high, starting with, of course, Oklo up almost 6%. Iron is up over 5.5%. Bitfarms is up another 4.7%. We got APLD up over 5%. We got ASTS 4.5%. So there is a lot of momentum coming back into these kind of names here. BMNR up almost 2%, with BITX is the one that's actually selling off a little bit, 2%, and TMQ down almost 7% as well. If you come over to materials, these right here is the performance, of course. We did have energy fuels up quite a bit yesterday, up another 3% pre-market right now. MP Material was up a lot yesterday, down slightly 2.6%, and Neocorp also down a little bit over 2% pre-market as well. And of course, we got the Magnificent Seven, which is also very positive, with NVIDIA, Tesla, Apple, Amazon, Meta, Google, Microsoft, Netflix, all of these stocks here pushing higher in pre-market, as volatility is back under 20. So it's dropping a little bit over 6% right now. Crypto is struggling. So Bitcoin and Ether is certainly seeing its fair share of selling pressure. So Bitcoin is down about 1.3 for two back-to-back red days here, trading back down in the low $111,000 here roughly. And we got Ether back in the low 4,000s. It's going to be very interesting whether we take down 4,000 again, if we are trading sub 4,000, or if we're going to hold up it at some of these levels here. So once again, thank you so much for joining, everyone. Again, if you have any questions, let me know, and we'll take a look at a few names here, a few stocks I can cover for all of you. And then, of course, we'll come back to the market. We'll take a look at the market dashboard as well, as we are continuing to sit at neutral to pretty elevated level, of course, for the markets as well. And volatility, of course, also stays somewhat higher. So gold, let's take a quick look here. Trading at yet another all-time high at just over 4,200. That's where it ended up today. $4,218 per ounce here, up another 1%. And take a look at this win streak. We are on a 1, 2, 3, 4, 5, 6, 7, 8, 9 straight weeks. 9 straight weeks of gains here for gold. And this is the third straight month of positive for gold. I mean, just absolutely incredible breakout and momentum coming in for gold here. Just phenomenal. I mean, it's up 161% since October 2022. Of course, not to mention silver. It is also pushing higher to brand new all-time highs at over $53 per ounce here. And it's up over 200% since August 2022. So the last 3 years, it's up over 200%. So insane. Yeah, thanks for running that. I really appreciate that as well. Is there any crypto based on rare earth minerals? Is there any crypto based on rare earth minerals, Jason? Not really sure if there is. Let's take a look at Robinhood, which has also been flying high. If you take a look at the weekly chart, of course, from November 2023, the stock's up 1,700%. But of course, on the daily time frame, we are seeing a little bit of a pullback, considering that it was incredibly overbought. L3 banker oscillator, we got the MACD crossing below that signal line, and the RSI also coming down. And so that support level is going to stay put at 120, all the way down to as low as low 100s for Robinhood as well. So those right there are going to be a couple support levels to watch for Robinhood. If you take a look at Bros, Dutch Bros, which again is one of the coffee shops, I think in the Middle East, or no, not in the Midwest, if I'm not mistaken. Dutch Bros, I think they're based out of Tampa, Arizona, but I think I've seen them in Minnesota, in Wyoming, and a lot of Midwest states here. I could be wrong, but I have definitely seen that Dutch Bros, and might even be in New Hampshire, probably. But yeah, support level for this stock is going to be around here at around $46, $47. We're seeing a nice little reversal trade opportunity, and we are seeing that L3 banker oscillator also pop up with some big buys coming in. The MACD crossing over the signal line, the RSI looks pretty strong. And right now that is going to be that support at $47 here, with a potential target back up to as much as $73, $74. So this could be a pretty strong potential trade idea at the moment. So keep a close eye on this for sure. And on a weekly time frame, for this indicator, we are also getting a bit of a buy signal there for Dutch Bros. So definitely keep a close eye on this one, as it could be gearing up for a nice little reversal moving forward. All right, let's take a look at NVTS. What is happening? NVTS is flying high. We did get a catalyst earlier. I forgot exactly what it was, but let's just go over to more events. 15 hours ago, soaring 26% after unveiling the next-gen power chips for NVIDIA AI systems, and then up another 3.8% here on this move. And of course, support level is going to stay at a 950s, and it is, again, incredibly overbought and extended to the upside for NVTS, with a next target all the way up to as much as $22 per share, with a very strong support at 950 down to as low as 550 for NVTS. Which stock to buy today? So just any stock, huh? Any stock. So SEMA, again, we like to take a little bit of a different approach. It's not so much that, every day we're looking at, a stock to buy, but rather as a market as a whole, and of course a lot of individual stocks, and depending on where they're trading, right? So if you look at the entire market, most of the stocks right now are extremely overbought, overextended. They are stretched to the upside. So from a buying perspective, just be mindful that if you are going to be trading, that you're trading on that momentum, but you are trading with proper risk management and your stop losses. From a long-term perspective, like I said, there isn't a lot of companies that are trading at close to the fair value, right? So everything's kind of a little bit more stretched to the upside with the valuations that are sitting at well over 30, 35, 40, even as much as 50 to 70 times earnings for a lot of these companies. So, that's the kind of market environment that we're in, is that everything is somewhat stretched to the upside. Now, there are a few companies, like I said, Meta, Amazon are a few companies that have been selling off a little bit down to that support. So these are a couple stocks that, one could consider. Amazon's at a very good support here. It's validated these levels at 210, 211 quite a few times. Same thing with Meta, as it has been selling off. It's been consolidating here since June. It's literally flat, and that's a support around 678, 691. So those are some levels to watch. And even SoFi came down to some pretty attractive levels down in the low 24, 25 levels. It's now back up to 28.50. A lot of consolidation sideways in that range. HIMS, if you take a look at HIMS, was a pretty good strong support around $40, $41, obviously pushed right back up. And now that support is around $51 per share, with a resistance up to $60 for HIMS and hers. And then also Oscar is a stock that we've been accumulating in the 13s, 14s, 15s, and it's right now pushing right back up from that higher low. So this right here was that ascending support, very nicely getting validated for Oscar. So that's where we are for Oscar here. Oracle, Shady, we've covered Oracle in our market updates, so please definitely do watch that when you get a chance, because we do cover a lot of stocks in our daily market updates, right, including Oracle. Hi from the UK, Sophie. Thank you so much for joining. Really appreciate you. Started out in Oregon. Yes, Dutch Bros started out there. Very happy. NVTS has done really well. SoFi end of year target, I would say like $30 is a pretty reasonable target for SoFi to close at. That's pretty much the all-time high, and I could easily see SoFi getting up there. And looks like we did get a price increase, price upgrade from one of the firms, from $14 to $18 is the upgrade, and resistance is going to stay at roughly $30 for SoFi right now. Looking into APLD, yep, that's part of our hot watch list. So if you come here, APLD is right there. It's been just absolutely ripping higher inside this uptrend. Support level around $18. It's a little bit of a blow the top off rally for a lot of these companies. As you can clearly see, the overbought, overextended RSI technicals are stretched to the upside here, and this is going to be that support right now for APLD. That's going to be sitting roughly around $32 to as much as $28. So that $4 range is where we're sitting for APLD in terms of that support there. NEBX, let's take a quick look here. We got Nebius 2 times. Since Nebius has been doing really well, so is the 2 times leveraged version of it. There's a lot of 2 times leveraged version of these stocks that are coming up here. And I would just say to be extremely careful, right? Because look, for someone, and in our community, we've got a lot of members that have been around in the markets for more than 10 years, some people even 15 to 20 years. And we've seen these cycles in the past where we do understand the euphoria and the greed. And once these leveraged ETFs and a lot of these stocks keep flying high, that's the time to really just reconsider the state of the market, right? Because right now you will also see that the reason why this hot watch list is there and almost everything is flying on this watch list is one of those easy money environments in the market. And when that happens, yes, we can take advantage of it. Absolutely, we can trade it. We can trade on that momentum. Trend is your friend, but be very careful, right? Be extremely careful, especially if you are looking into these leveraged positions like NEBX, which is like a 2 times Nebius daily ETF. It can be very, very volatile, right? So you really don't want to be caught holding the bag here, as it can in 2 days drop like 27, 28, 30%. And that can be pretty disastrous, right? So you definitely want to be very, very careful. I will continue to caution every investor because of the fact how volatile these can be. And if the underlying drops, then it can be pretty brutal. Yes, they also decay like options, leveraged ETFs. They decay daily as they are meant to essentially track the underlying index or the stock or ETF on a daily basis. And as a result, you do have pretty substantial decay. And the fees are also higher when you are trading them. So that's also something to keep in mind. Sophie, I'm up 90% on NVTS, but think I might keep long-term as only 125 shares. That's incredible. Congratulations on that. You think TSM stock is going to go up after earnings? So one of the things that we do have on our platform is historical earnings data, right? So if you come over here and you essentially go over to any stock, you can pretty much look up, any company here. And then under the earnings volatility, it'll essentially tell you, right now we don't have it for TSMC because it's an ADR, but just to give you an example, you can come over to, let's say, for example, NVIDIA, come over to fundamental analysis, earnings volatility. It's going to tell you exactly the average price movement, median price movement. You can pretty much filter down from 4, 8, 12, 16, and 20 quarters. And it's going to tell you every time the stock has essentially beat or missed expectations on both EPS and revenue. So that's going to be available in a nice little table format, as well as some charts and some historical movement of the stock also available. So while it's really difficult and almost impossible to predict what's going to happen after earnings, in my opinion, I think TSMC is one of the best companies out there in terms of its strong-term, long-term growth here. And of course, from its April lows, the stock is up over 134%. So this is one of those companies that you essentially just kind of buy and hold, and very similar to ASML. ASML, by the way, we haven't talked about. They reported their earnings. They are pushing higher, 5%, beat on EPS, a little bit of miss on revenue, and now getting back up to over $1,000, and that is where the resistance is for ASML. So close to 1,035, 1,036 is where we are, with a little bit of resistance where we have gotten rejected in the past before. Okay, let's see. David, hi Karthik, if you were 22 years old today and didn't need money for a while, would you go all in into the S&P 500 and hold? So that's a very interesting and very good question, by the way. And knowing what I know now, and if I were 22 years old, I would take on more risk. And really in my understanding and what I've really talked about on the channel before is that concentration is what builds wealth and diversification is what keeps it, right? A lot of people, obviously want to diversify their portfolio. We've heard the saying, don't put your eggs in one basket, and that's totally fine. If that's something that you're comfortable with, do that, diversify. S&P 500 is a great index vehicle to buy and hold. In fact, even I have VUG, the Vanguard Fund, which is a little bit more growth oriented. But as I've said before in my previous updates, is like the younger you are, the more risk you can actually take because your peak earning years are still in front of you. The older you are, the more you want to kind of taper off on that risk and focus more on income. And so, if I were 22 years old, I would be looking at where I can concentrate my focus, my energy. Of course, the first thing would be leveraging my skills to increase my income. And the second thing would be, obviously living very frugally to save as much as I can to invest aggressively in some of my highest conviction stocks. S&P 500 is fine. If you want a more passive approach, that's totally fine, like I said. But if I were in your position, that's what I would do. Is focus on sort of my high quality, high conviction stocks here that have the potential to generate my next 2x or 5x or 10x opportunity, and then just multiply from there. Once you've got a pretty large capital base, that's when you can start to generate that yield, right? So start focusing on from growth to income, right? Because a 7% yield on 100,000 is $7,000. It's not going to be life changing, but 7% on $1 million is $70,000, and now you can actually replace your income on an annual basis. So when the numbers are larger, the yield actually makes sense. It's life changing, but when the numbers are smaller, income is really not the goal. The goal is to grow your capital, so then you can eventually diversify and invest in income producing assets, so that you can replace your active job. So that is something that what I would do if I were 22. But that's a good question. Going to Bitcoin, Ethereum for the next 10 to 15 years. Yeah, I mean, Bitcoin and Ethereum have done really well, of course. And I keep, obviously looking at those videos sometimes. They pop up on Instagram and Facebook where a couple guys from back in 2009, 2008 were like, hey, just buy $1 worth of Bitcoin. Just buy $5 worth of Bitcoin. And of course, back then it was a very, very asymmetric trade, where the risk reward was very much tilted, right? You're only investing $1, $5 in Bitcoin, and now it's worth hundreds of thousands of dollars, right? So, yeah, are we going to see very similar returns? Probably not, because when you're starting off with a really low base, your return is substantial in the thousands of percentages. But when the numbers get bigger and bigger, your percentages go lower and lower, right? So for Bitcoin to give you the same exact return as it did from inception would be just nuts. I don't even want to do the calculation. But if we take a look at Bitcoin right now and where it was, let's say back in 2011, it was at around $6 or $7. It's up 5 million%. Right? So 5,151,000%. So obviously 5 million% from now is going to be ridiculous, right? So that's why historical performance cannot be gauged with future performance, right? It cannot be something that we use to predict the future. It's a good lesson and an understanding, but obviously as numbers get bigger and bigger, growth rates and returns come down. And that's why, in my opinion, for NVIDIA to double now is a very, very difficult thing. I mean, it has to go from $4.5 to $9 trillion, right? $9 trillion is what NVIDIA would need to hit in order to double from here, right? So a lot of people say, oh, can it get up to over 250 or 300? Yes. Price-wise, it sounds okay in theory that it can get up to like $200, $250, or even $300. But there's a lot more complications than that. It would have to essentially have a notional value of well over $7.5, close to $8 trillion. And so, there's obviously a limit to how much returns a company can generate. And that's why NVIDIA is now focusing very much on investing in other businesses, right? So they're investing in CoreWeave, other companies that they can actually, invest in to actually make good return. Otherwise, they would have just been buying back their own stock, right? They've got plenty of money. They could have just bought back a lot of their own shares. But they also do understand that it's not going to be the best ROI. The better ROI is going to be investing in smaller companies, right? Companies that are worth $1 billion, $2 billion, $5 billion, and focusing, having full control, full sort of operational autonomy over those companies and growing those businesses and taking them to the next level. So, all right, market's about to open here. That's what I would have done if I get to travel back in time once, put 50K in Bitcoin, LOL. Yeah, I mean, it depends on how old you were too. Like, I don't know how old you were, like Gary, in 2009, but I was like, what, 12, 13 years old? Yeah, even in 2010, 2011, obviously it was something that we heard on a fly, but it wasn't like, obviously I wasn't active in the markets at all. I was in freaking school. So yeah, it depends on how active you were. But yeah, obviously could have, should have, would have. Imagine begging your parents to buy Bitcoin as a 12-year-old. I know. It would have been crazy. They would have been like, what are you talking about? Go back to school, do your homework. Those memes are really funny. Like, like a baby, obviously not even born, as like me wasting my time not being born when I should have been buying real estate or Nvidia stock. And I think that's really why it's so important. Like, and we're gonna start something like this for our Discord channel as well, for all the parents to share, sort of like financial wisdom with their kids and strategies on how they're teaching the value of money to their kids. And that's something that we're gonna start in our Discord as well, because the earlier, they start, the better off it is. The sooner they start, the better off, because, I had a nephew, like my brother had a baby like about a year and a half ago. So I started a simple fund for him. And every birthday, I'm going to put money in. So it's going to compound. And at 18 years old, I'm going to give it to him. And so that really over 18 years compounded is going to be a good amount of money. And then, of course, if that continues over his lifetime, he's obviously going to end up with way more over many, many years, because compounding takes time. And the more time you give it, the bigger the portfolio is going to be, right? So the sooner you start, the better off it's going to be over the long term when it comes to compounding. So he says, in 2009, I was buying a house, lost our house deposit temporarily due to Iceland going bankrupt. Super scary, but started investing slowly. After that got sorted. Wow. That's crazy. Hope everything worked out. In college in 2016, a buddy of mine offered me 2,000 Bitcoins for around $3,000. How I wish I had taken that deal. Ugh. I mean, there's like so many stories around Bitcoin, right? I mean, there's like so many regretful stories I feel around Bitcoin, because I know people that, not know people, but I've heard of people, of course, that had Bitcoin in their drive, like hard drive, or like their USB stick, and they lost it, right? So millions of dollars worth of crypto just like sitting in some USB stick, don't know where it is. Then, of course, people forget their passwords, their key phrases, and all that. And it's just mind-boggling. How much is just sitting? I don't even know if there's a study that tells us how much crypto is just sitting there and can never be accessed anymore, because of obviously human error and the people like being irresponsible. How much is just sitting there without any access to it? Yeah, someone who used to buy pizza. I know. I heard about that as well. Anyway, so markets are open. Rob, thanks for all your valuable insight on the market. Do you think of Progressive as a potential buy? Currently, we'll take a look at that here. Dude, that's like Jensen taunting Masa on how he used to be the biggest NVIDIA investor. Core V, fair value. We'll take a look at that as well. But let's see. The markets are open. NVIDIA is up over 1.8%, selling off a little bit right at the open here. SoFi also dropping a bit. Gold and silver at all-time highs. I'm going to turn that off. It can be pretty annoying. And we got QQQs up over 90 basis points right now, with S&P 500 up over 64 basis points at the moment as well. Volatility back under 20, so 19.44. We're probably going to be in the 50th, 60th percentile. Anything over 28 is the 50th percentile on the VIX here. And of course, the MoneyVest index sitting at around 3.4, 3.41 at the moment as markets recover very nicely. And of course, Bitcoin also selling off, as is Ether right now. So thank you so much for joining, everyone. Really, really appreciate it. And we're going to jump into Discord, send out updates, answer some questions there. And again, if you have any questions at all, please email me at admin@moneyvest.com. Again, more than happy to help in your investing and trading journey. And of course, we do have our Discord and Patreon also available for anybody who is interested in joining. So that is going to be there. I'm going to just put the link there if you are interested in joining. So thanks again for being here. Really appreciate you all, and see you all in our Discord. Again, any questions, email me at admin@moneyvest.com or message me on Discord, and I'll get back to you as soon as possible. Thanks again. Take care.